Friday, March 3rd, your market update. We're going to talk about some really interesting things with oil, and I'll give you a new way to look at the calendars here to see the upcoming events, what's going on, and what to keep your eye on so you can stay one step ahead. And this is why we do this every day. So I want to give you, instead of just talking to a blank screen or just seeing me, I want you to be able to see what's going on so you can look these things up yourself. Quite honestly, you don't need to come look at the market update each day. I want to give you the information so that way you can go do these things every single morning, or you can come here and we can talk about them together and you can listen to it for a few minutes. So what's going on, guys? Brandon here. Hope you had an awesome week. It's already the weekend, it's already March, so make use of your time. Prepare. This is the time to prepare for what is coming. And as Jim Rohn says, hey, this decade is going to look a lot like last decade. A lot of crisis mixed with a lot of opportunity. It's the same thing now. The very same thing now it's going on. So really quickly before we jump into this, we're going to talk about crude oil. I haven't talked about this very much and read any of these reports necessarily, but these are good reports. And I don't want to just sit here and read off things, but they do highlight things. That's why I really like this site, and this is why I show this to you guys. It gives you dang near everything. Look at it. It gives you a calendar alert as well. I believe you can set these up. But the United States ISM non-manufacturing PMI report at 55.1. Consensus was 54.5. So previously, so it gives you updates, and I'm going to show you that in a second. I was actually going to get to that here to show you the calendar and where to look for that. But it does give you and highlight some things like crude oil, some of the big ones that we talk about all the time. Honestly, I don't even look at these a lot of times, but I was just going through here and again seeing their write-ups and what they have. They usually, I'd say every day, every couple of days at the very least, they're updating these. So there's a really important site to be able to see what's going on at a high-level macro view and check all these different indicators we always talk about. Go up here to the calendar and check upcoming dates for what's going to happen and what's happening. So, whether it's just news in general like this, and they'll talk about different news around the world, economy, markets, just news in general, a calendar, so like it's, again, important dates where numbers are coming out like that, unemployment, which we'll see in a second, when the Fed heads are talking, these goons are talking, the markets in general, indicators. Again, you can go through all this, look at the different countries. So this really is a phenomenal site, and I don't want to downplay it because it really is an awesome site. There's some other great sites too, like Macro Trends. This is a great site as well if you're looking to chart and things like that, and go to look at charts. So I just want to give you a few things like that first before we tip off here. Because it's important to kind of know what's going on, because we are in a very, very interesting time. So crude oil, like we always say, the trifecta, the three things that really affect the markets are oil and the 10-year treasury. Those are the biggest things, and the DXY. Those three things, that triangle is what really moves the markets and really, as you can see here, these write-ups, and it kind of explains what we always talk about. So crude oil futures fell more than 2% to below $77 per barrel on Friday. Lingering concerns about a recession-driven demand downturn offset prospects of tighter global supplies. But then it goes to say, hey, there's a floor being put here at the same time, a growing rift between OPEC countries, Saudi Arabia, and the Emirates, sparking fears of a crack in the cartel's policy, which could lead to more supplies. Keeping a floor under prices, Russia announced its plan to cut oil exports, and they already did. On top of that, investors expect China imports to be a record high in 2023 amid rising demand. So you can see right there, there's always this push-pull of society, right? There's always this supply and demand pull. And that, again, this is something that we just don't learn in school. One of those things they purposely don't teach us, but really supply and demand is everything in life. Whether you're going to get a job, we have too many lawyers or too many MBAs already, we don't need anymore. So you're getting a lower job offer, pay, or salary. Well, that's because there's too many people, or that company doesn't need you. There's just too many people in general in the market. So maybe a better profession like contractors right now. We need tons and tons of contractors. These guys are making a mint. Subcontractors, general contractors are writing their own paychecks because no one's doing it. I mean, I was in the real estate industry for the last 10 years, buying homes, helping people buy and sell homes, renovating homes. We were renting them out or refinancing them, doing these renovations. I would talk to guys all the time and saying, man, there's no one under 30, 35 that's doing this. We can't, and the people that there are, we can't trust them. We're kicking them off jobs, and there's no one doing it. And we wish there were, because we could be 10 times bigger. We're writing our own paychecks, but we can't find anyone to do the work. So that's why this is so important, because you want to see the push-pull. Right here, there's these recession-driven indicators saying, hey, whoa, oil price is going to go down because people aren't going to be working as much. I don't know, there are going to be future lockdowns, going to be climate lockdowns. But then all of a sudden, at the same time, China says, hey, we're importing a lot more. Russia's cutting their exports, things like that. So it kind of balances it in a way. This is why when it seems like, hey, oil should just be getting crushed or oil should just be rising, going through the roof, there's a lot of equilibrium. That's why things generally like this, like commodities or like we say, the bond market shouldn't be moving that quickly there because it really kind of stays in this equilibrium. There's always these push-pull dynamics going on. And Andy Tanner, one of Robert Kiyosaki's mentors or advisors, I should say, he always talks about inflation and deflation, thinking of a balloon, and you have these two opposing forces. And one is being sucked out of the balloon, and the other one's are like pushed in toward the balloon. And the other one is like when you think of you're pumping up a balloon or like a hot air balloon, so you're pumping air into it. So these two opposing forces on either side of the balloon's wall, the skin of the balloon, you're pushing both directions, like inflation, deflation. So inflating the balloon, and there's the deflation of trying to deflate it coming from the outside. So that's when it generates an equilibrium, that's where you see prices not moving that much or things like that. So the start of the day just happened here, and again, we actually were below 4% on the 10-year. So we're jumping into the metrics here, and we're already back up about 4%. So again, this is kind of the red alert territory. This is where the Fed heads start getting very antsy. People start getting very antsy, and it starts signaling and really red flagging going. Red flags going up. So let's check the 10-year so we can see that it just So it bumped down just a little bit ago. It's at 4 and then bumped down just in the last hour or two, last couple hours, and then it bumped back up again to 4 already. And let's see in the last week here. So again, we can see these big pump in yields. Look at this in the last month and last 6 months, last year. So it's just continually grinding higher. That's why the Fed is really like, hey, what's going on? And they're looking at the labor market. They're giving all these different signals. This is why, and again, I'll try to show you in a second. You have all the different Fed heads. They're always out like each week. There's always like they trot out like 3 or 4 different people, and like they'll tell you different things. Hey, this guy's like, oh, things look great. We're gonna have to cut or we're gonna have to raise rates more. The next guy's out like, well, I don't know. I don't know if we can be so hawkish. They're constantly putting out trial balloons and testing the different language to see how the markets react. And quite honestly, like again, Dr. Jeff Ross says the Fed's probably been the most honest actors, government agencies. The Fed's not a government agency, I guess, but one of the biggest corporate governmental agencies out there over the last couple of years, and then they really have in a way. All the other government agencies are lying through their teeth and not telling the truth and obfuscating truth in bed with big tech. But the Fed's been very transparent actually in saying what they're going to say, even though they kind of talk out of both sides of their mouth. They get things wrong all the time, but it doesn't mean they're not being transparent or not being trying to say what they think is happening. I mean, again, it just shows you like, oh, it's transitory, inflation's transitory, oh, it's going to come down, oh, it's inflation speaking. They're constantly getting those things wrong, but hey, at least they're coming out and saying something, I guess, right? Instead of just hiding in a corner. So that's the 10-year, and again, we're going to continue watching this because this is now continuing to trend higher, and we're going to keep watching this because the more this grinds upward, the more there are problems in domestically in the United States, people servicing their loans, and then also around the world. People really start having problems. This is the variable rate mortgage you think of. This is all the debt that countries have. Their debt denominated in dollars. They're having to find more and more dollars to pay off these same loans. This is why you see countries and currencies collapsing. This is the currency wars that Jim Rickards had talked about. Everything. This is what is happening. And the Fed, again, will most likely have to come in. And there's these theories of, they want the rates to go up, they want to crush Putin, things like that. But ironically, that doesn't crush Putin. It really doesn't. So I don't think that's necessarily it. And I think the Fed's playing their own game. I think they're trying to save their own reputation. I think that's probably more along the lines of what is truly happening at the end of the day. So this is a fascinating time. Let's keep our eyes on this because the 10-year Treasury, where the 10-year Treasury goes, the tail goes. Everything else really goes with it. So speaking of that, where's the DXY? Yeah, right about 105, kind of where it was yesterday. You can see, again, this trending upward, just like the bond yields, bonds selling off, meaning people are selling out of those bonds, and they're jumping into stocks. I mean, so you see stocks up a little bit, obviously, right? So you have the Forex, so they're going into the DXY, the dollar a little bit. Obviously, we can see that it's been up to 105, and most it's been in 2 months. So people are selling out bonds a little bit, right? For the second bond, so bond yields are going higher, so the value's down, bond yields up, and they're jumping into the dollar, maybe in cash a little bit on the sidelines, and in the stock market a little bit. Apple, a couple of these stocks up a fair amount. So that we talked about oil right about 77. So kind of this equilibrium right now. So that takes care of like kind of those three, that trifecta that runs things and really is the gauge, the weather gauge of what's happening. Now the liquidity aspect of what's happening with liquidity. Silver is still down. Silver, gold, and Bitcoin are really kind of those liquidity gauges of like what's actually happening with central banking and global M2. And Lynn Alden talks about that. Preston Pysh, Dr. Jeff Ross, all of them really talk about that. And we can see they're down a little bit, but just slight bump on the day here in the morning. And Bitcoin is down because of the Silvergate thing. So problems in the crypto industry itself dragging Bitcoin down. Even though Bitcoin and crypto are completely different, Bitcoin is a digital asset without an issuer. Unlike every other crypto, they're all securities, and they're all these scams off of Bitcoin. Bitcoin does get dragged down a little bit by the crypto carnage. So it's good. We hope that whole system gets cleaned out and is gone. It probably won't really ever happen, but there are things coming out with Silvergate, with Bitcoin, in that world. And you know what? I don't know if we had an article somewhere. I think we do here. So Silvergate right here, weighing the fallout, potential fallout woes of Silvergate and what's happening here. So we'll actually probably do a separate article on a video on this. So again, a lot of crypto contagion because the rates keep rising. So this is one of those things. If rates keep rising, this is what happens: is all the bad actors get washed out. As Warren Buffett says, we like him, we don't like him here. He has some great advice, but he also does a lot of weird things. But one of his great pieces of wisdom is when liquidity goes out, the tide goes out, you see who's swimming naked. And this is where the FTX, a lot of these garbage platforms, exchanges, complete outright frauds, everything, they get washed out. And so we'll see with Silvergate what happens with them. And again, if they collapse, or certain companies here continue collapsing, the rates keep going higher, the bond yields go higher, well, guess what? There's going to be more contagion. There's going to be more contagion in the equity markets, more contagion in the crypto markets, and it's going to drag Bitcoin's price down a little bit. All that is for us is an amazing buyer opportunity. That's it. That's all it is. Remember, Bitcoin is an asset without an issuer. It is true savings, the only finite asset we have. The only other finite asset we know of is time. So time is Bitcoin, and Bitcoin is time. It's a completely decentralized network. Again, reminding everyone, this is whack-a-mole. You can't get rid of Bitcoin. You don't ban Bitcoin. Bitcoin bans you. So do you want to put your savings, long-term savings, in a dollar that's going to depreciate and lose value over time? A liability we were taught was an asset? Or do we want to have it in Bitcoin that is a system completely outside the hands of psychotic government and central banks, and that continually goes up in purchasing power over time because it gets more rare over time? There's a finite amount and it gets lost. Some of it gets lost over time, so meaning there's less and less over time. So that's up to each person to decide. It's not financial advice, this is freedom advice. So let's check out, we checked out everything there on the metrics, I believe. Let's see the debt. Oh yeah, the debt's still there. So we know, again, the dollar is debt, so it's going to keep getting printed into oblivion, and we're going to lose if you hold the dollar long term. If you hold the dollar long term, you're making a decision, an investment decision, saying, I believe the dollar will win long term. Maybe that you believe that. Maybe you do. All I know is it's lost 95 to 99% of its purchasing power over the last 110 years, and I don't think that trend is going to go the other direction. So here's the dollar against Bitcoin just the last 10 years, getting absolutely decimated. Just exactly what I had just laid out and just had explained. And at the end of the day, let's see if Bitcoin's running. Hopefully it is. I mean, it is whack-a-mole. So the most decentralized, hardest supercomputer ever to exist should hopefully be running. I don't know why it's not loading, unfortunately. Let's force that reload. And let's see if in the mempool here, the miners, oh, beautiful. The blocks are moving. Blocks just 5 minutes ago and 6 minutes ago, 11 minutes ago, blocks are coming in. This is beautiful stuff. We'll see time chain calendar, what's going on here. Still just under a 10-minute average. You know what? Let's refresh this. This looks like it might be that yesterday's. 300, yeah, it is. 327 exahash. So it has 327 quintillion hashes every second. So think about how strong that network is. Never been more miners in the network, nothing comparable. So you think the Fed goes down or Facebook goes down, you're out of luck. But guess what? One miner goes down, one miner gets shut off in someone's house, something like that, it doesn't matter. Because there's still quintillions of hashes going on no matter what. That's the beauty of this. China just banned miners a year ago, and they banned exchanges years before that. And it just keeps getting stronger. It went down 40 or 50%, the mining rate in 2021 when it got banned in China, and then it came back even stronger, and it's been hitting all-time highs the last 2 years straight. Every year, more and more miners. So it's a good, benevolent virus for humanity. Peaceful protest for removing yourself from the fiat, corrupt, legacy monetary system and putting the currency, money issuance back in the hands of people. Code, rule, not rulers. So I appreciate you, your time and energy. Hope you have an awesome Friday. We have insanely crazy things going on, but we couldn't have better opportunity and a better life in front of us if we so choose. If we so choose. This is not financial advice, it's freedom advice. And I appreciate you coming to my TED Talk. Please share this out because the algorithm hates truth. The algorithm hates freedom, hates liberty. It doesn't want that. It wants to promote bad things. Just like we see TikTok, stuff like that. They got their algorithms. They're promoting, this garbage on TikTok. Where in China, they get to have financial things and educational things there. It's weird how that works. Again, don't follow the science, follow the money. As Nolan Bowerly says, the stupidest phrase in the world to make you feel like an idiot and emotionally drag you into the muck, the swamp, is follow the science. No. It's follow the money. Follow the money. It will tell you everything you need to know. As Charlie Munger said, show me the incentive and I'll show you the outcome. So I appreciate you guys. Again, please share this out to people that you think might need to hear this or maybe they don't agree at all, or maybe they totally agree. Please share this out because it's the only way this is going to spread. It's the only way we're going to make life better for ourselves by having more and more people on the same page and building community together. Remember, at the end of the day, independence and resilience is the way we get out of this. And being ready, prepared, taking care of our mind, body, soul, physically, mentally, spiritually, and emotionally. That's it. So have an awesome weekend. I appreciate you more than you know. Time is Bitcoin and Bitcoin is time. So take care of that time. And I appreciate you using it here with us because the more we are independent and resilient, the more we can remove ourselves from that system and not be the subject, the serfs to these overlords that think they have control over us. Absolutely insane that we have even got to this point. But here we are. We are the ones that are going to drag society out, though. We only need 1%, 5%, 10% of people. That's it. We don't need more. We just need the people with ears and eyes to see and hear. So I appreciate you more than you know. And I look forward to seeing, Bitcoin, gold, silver, food, energy, water, land, barterability, and community. Community is the biggest thing. Security, firearms, ammo, everything. Get prepared. Now is the time. Now is the time to buy insurance. Now is the time to prepare, and then you can sleep great at night. Then you don't need to think about it. Once you do it and take a couple months to do it or this year to do it, then you're prepared. You have all the stuff. It doesn't go away. These are non-perishable goods, things that you can barter with and trade with in the future if you need to. Food storage, all these great things. Then you're set. Then you sleep like a baby. Please, I'm begging you. Let's get prepared. Let's get independent together. Look forward to seeing you on the next one.